What is up guys, Taiki here, and welcome to Farmers of the Week, Stablecoin Edition, where I'll be going over a bunch of stablecoin farms across all ecosystems. Also, I'll be discussing the significance of spell flipping MKR, so if you like the content, please like and subscribe, and leave a comment in the comment section below so let's get started. Okay, so let's discuss this event first, because I woke up this morning and I saw this and I'm like, wow, it actually happened, where spell and its spell token flipped MKR. And I mentioned last week, I made a video on this, like why this was going to happen. I didn't expect it to happen this fast, but hey, I mean, it makes sense, right? It was only a matter of time. Spell is a better product, better team, better community, just better tokenomics, better everything. So it was only a matter of time before, Spell just flipped MKR. And I kind of want to touch on the significance of this event because there are 3 points. First, it means that incumbents can be flipped, right? MKR, sure, they're a great product. They have over $10 billion in TVL. However, their product hasn't really changed, right? And you don't want to bet on products that are just static, right? Because when the incumbent gets complacent and doesn't innovate, a better product will take over. And that's the case that happened with Aggregator and Maker, right? Aggregator team, they were like Maker is kind of trash. Like, let's make a better one that more people can use, that people actually want to use. And that kind of goes over to my second point, where multi-chain projects are more valuable for now. Now, I think a bunch of us subscribe to the thesis that, hey, like if Ethereum can actually scale, then like what's the point of these other L1s, right? If Ethereum transaction fees are low, right, let's say 5 years from now, there's really no point for me to use Fantom, POLYGON, AVALANCHE, etc. But in the short term, it doesn't matter, right? Because right now, at the state of Ethereum, as more people use Ethereum, it becomes more unusable. So the majority of demand from retail investors like you and I are going to go to other chains, whether that be Avalanche, Fantom, Polygon, Solana, anything, right? So in this moment, right, in this, I guess, zeitgeist, you want to bet on multi-chain projects because multi-chain projects are going to just capture more market share. They're going to have stronger brand awareness, and projects that are ETH maxis that's going to just stay on Ethereum, they're going to lose market share, which we've kind of been seeing, right? MKR is just on Ethereum. They haven't changed their product, and they're just losing market share to Aggregator, which is a multi-chain project, which is, I mean, it's also a better product too. So there's that. Lastly, revenue share tokens are more bullish, right? How spell works is that if you take your spell and you stake it right on the Aggregator website, you roughly earn like 20 to 30% APR, right? You get to earn part of the protocol fees. The difference from, I guess, Spell and the MKR model is that with MKR, they do buy back the token and burn it, right? But it's a completely different model, though it does sound familiar, right? Though it does sound similar. TetraNode, who is an Ethereum whale, put it best, I think, where, I kind of agree with him. Like, he's not a fan of buy back and burn because it basically gives dumpers exit liquidity. When the system buys back the token and burns it, well, all the whales, all the VCs, all the early bag holders, it just gives them more reasons to, to sell the token. Consider cash flow based on time commitment. In order to enjoy the money, you can't sell your printer, right? If you want to enjoy the success of the Aggregator protocol, you have to take your spot and stake it to earn part of the protocol fees. That's kind of the point. Also, this is a tweet from Degen Spartan, right? He's also an Ethereum whale, and he kind of just talks trash about the MKR token since the beginning of time, where essentially 100% of MKR holders would have been better off holding Ethereum, right? This is a Maker ETH chart, right? So taking the price of Maker, dividing it by the price of Ethereum, because Ethereum goes up more than Maker, but Maker goes down more than Ethereum, right? On corrections. So like if you're holding MKR, like what are you trying to do? Like what are you trying to accomplish here, right? So this kind of the significance of this. Spell flipping Maker, right? If you don't own Spell, like don't worry, right? It doesn't really matter. It just means that, hey, like in the future, you want to bet on innovation, you want to bet on products, you want to bet on teams with a better tokenomic model, right? Because the MKR is essentially a governance token, right? Sure, they sometimes buy back and burn, but they're a governance token. And there's a difference between being bullish to protocol and being bullish to token. For example, I love Aave. Aave is my favorite application in all of DeFi. However, I haven't held Aave tokens for a super, like a long time now, right? Because Aave is a governance token. I can love the protocol, but I don't have to own the token. And that's kind of the mindset that people kind of have to have, right? Where like, I guess with like stocks, it's kind of different too. Like you can like love the company, and I guess if you love the company, you kind of, it makes sense to hold the stock. But I guess in DeFi with these governance tokens that don't really accrue value, you can love the product, but you don't have to hold the token, which is kind of like a weird concept to think about. Okay, so what I've been doing is this. I've been farming Spell. I don't know when I took the screenshot, but I have like roughly $1,000 in Spell that I farmed over the course of, let's say, 3 or 4 weeks. And I'm just sitting comfy in it. Sure, like I would have been much better off just buying this PEL token, right? But it's part of, I guess, my risk mitigation strategy. And also, it's also part of my Bitcoin and ETH strategy, where I take my Bitcoin, right, and Ether, right, use it as collateral in money markets, such as Aave. I borrow dollars against it and farm SPEL at 30%, right? Sure, this isn't going to be like a moonbag strategy, right? Like if you want, I don't really talk about like, 10x altcoins. If you want those suggestions, I suggest you go to some other YouTubers. I talk more about sustainable strategies that's going to grow your portfolio over time. So, I'm just like sitting really comfortable, holding Bitcoin and ETH, feeling borrowing dollars and just like putting it into farm token, a spell farm. Because, like though Bitcoin and Ether might not move as much as like other tokens, I feel like a month from now, right, I'll look back at the strategy and be like, wow, like, this was a really, really comfy strategy, right? It's a really good way to earn yield on your Bitcoin and ETH indirectly, right? Because I'm not really earning that much yield on Bitcoin and Ether, but because I'm using it as collateral, I'm essentially unlocking stablecoins, from my collateral and taking those stablecoins and earning 30% on an asset that I'm super bullish on. Because if you look at this, right, the current price of SPEL is roughly 3 cents. Right, and if you think that SPEL is gonna go to 10 cents or something, right? Like I don't know if I believe in that, but maybe I'll probably be out by then. If you think that the price of SPEL is the fair value is like 3 times higher, then you can you can look at this ROI and be like, okay, well if I think SPEL is going to 9 cents, then technically my APY is 93% because I'm farming SPEL, right? And if SPEL goes up in value, then the APY goes up in value as well. So it depends on like what kind of things you're looking at. And there's been I guess a shift in mindset, right, from like 6 months ago, because I rarely do Degen stuff anymore. I feel like if you go back to my videos in April and May, right, I was just going crazy on the Polygon ecosystem. I was just like in these farms every single day. I made a lot of money, but like it's not really a scalable strategy, so I'm kind of phasing out of that. And so for those that are still looking at these Degen strategies, here's a thought process that might help with your risk management. Just ask this to yourself, right? If I can earn 30% with stablecoins farming SPEL, I better be damn sure that I'll make money in this Ponzi farm, right? Because if you're Degen farming, it means that you're entering this like some form of Ponzi farm, right? And you can replace the 30% or like this token with anything else, right? Like for example, I'll go over the TERRA farm where you can earn 40% over 40% on UST, right? If I can earn over 40% on UST, then I better be damn sure that this farm I'm entering, that's a Ponzi, it better do damn well, right? So it's kind of like the opportunity cost, right? Because when you lose $1,000, you're not just losing $1,000, you're losing the additional yield and capital gains you could have earned on that $1,000 if you hadn't entered a particular Ponzi farm, right? So this is the type of mindset that I think you should have if you're taking on a bunch of risk. Because getting rugged, getting liquidated has a huge opportunity cost, because crypto is a market that trends up with over time. So if you're just like gambling and losing money, then it's probably not a long-term viable strategy. So that being said, that's why I wanted to do this Farms of the Week Stablecoin edition, because if you take a look at a bunch of stablecoin farms across a bunch of ecosystems, well, maybe you can ask yourself, I feel like gambling on this Degen farm, but hey, if I can earn 30% on this, is it worth it? And you're gonna have to make the decision yourself. So I'll be going over farms that I feel comfortable putting my money on, but as always, you have to do your own research, and none of this is financial advice. Okay, so let's discuss the Fantom ecosystem, right? So obviously the SPEL farm is a good one. It's yielding 31%, but there's also on Curve, right? On Fantom Curve, you can earn this guy's pool here. You can earn roughly 16%, right? So, I think the best farm on Fantom is the SPEL farm, but I'll go over a few other farms as well. The second one is Beethoven-X, right? I covered this last week as well. It's at 200 million TVL. The price of beats has tanked it to 70 cents. So I consider this to be a farm and dump token, right? You can't just look at the TVL and be like, oh, it's undervalued, because the market cap is, I'll show you actually, it's up here. All right, see, 70 cents, $11 million in market cap. I mean, you can't just look at that, right? Because there's zero utility for the beats token. So you expect it to be like, dumped on by like, people farming it. But, if you're interested in this, there's a bunch of decent farms, to be honest. So steady beats here, 21% on USDC DAI, and whatever this thing is, 23% on USDC DAI and MAI. Right, MAI is it's also another stablecoin. And maybe maybe you think that beats is undervalued relative to Spirit and Sushiswap. Who knows, right? I'm just trying you this farm. I'm not in this one. Okay, so let's connect to TERRA, because this is another farm that I've put my funds on in the past. They are a leveraged yield farming protocol. So essentially what you can do is you can take your LP tokens such as FTM TERRA, put it on here, you can lever it up, etc. Me personally, I don't like to lever up my LPs. It's just like super dangerous. However, what you can do is you can lend your assets to these degens that are, borrowing these tokens to lever up. For example, for USDC and FTM, you can go here and you can earn 29% on USDC. So what you do is if you take your USDC, put it here, you're essentially lending out your USDC to the degens that are, levered farming this. And you can kind of go down to like, what better rates you can earn here. 29% on USDC, 34% on Tether, and you can earn decent yield on like FTM too, right? Like even ETH, 16% on ETH, 18% on FTM, etc., right? 14% on BTC, etc. So, I consider this to be medium risk, 29% on MIM, 25% on DAI. I'd say this is medium risk, but you should know that I put my funds on here in the past. Okay, so let's now go to the Harmony ecosystem, right? Because I discussed this. Let's refresh here. Tranquil Finance. So this is a money market. Okay, there you go. This launched last night, I believe, at 8 p.m. right? And it's done pretty well, like 56 million TVL. I think this is like in par with expectations, at least my expectations. Maybe the tokens aren't doing well because maybe the market expected like a more explosive growth. But to be honest, like without Chainlink oracles, without like backing for the Harmony team, it was going to be hard for this to hit billions of TVL anyways. In fact, if this thing gets to like 9-figure in TVL, I would consider that a success. But anyways, you can earn pretty good yield on all these assets. Keep in mind, like most of the APY is going to be paid in the Trank token, and the Trank token is being like perpetually dumped on. I think it was like $1 at some point, or it was like $1 like 36 hours ago. Now it's like down 60%. So it's a governance token, so you gotta do what you gotta do what's best for you. But if you want to take your Tether, take your stable coins, Bitcoin, etc., put it on here, earn some yield. That could be a good one, right? And you can also, I believe, get paid to borrow, right? So you can just be paid to borrow, etc. I'm not in this one because I just don't feel like this is good enough for me to bridge over. Not having Chainlink oracles is pretty important to me. So, and if the Harmony team backed it with their own money, right? If they gave them like $3 million in incentives, I'd feel a lot more comfortable. But because the Harmony team, I guess they're more conservative with their liquidity mining program, I just don't feel, I just like don't see the point to bridge more assets over. All my, I guess, Harmony farms is in DeFi Kingdoms. And I feel comfortable just farming that, like for the next couple of months, right? I have a super long time horizon on this one. I've seen a lot of like, FUD, like fear, like it's like, oh my God, Jewel is down to $3.50. But if Jewel is trading at $3 like next week, I still don't really care. I'm just like more farming it for the longer haul. Okay, let's go over to the Avalanche ecosystem because this Avalanche also has some pretty good farms. On Curve, obviously you can earn roughly 23%, right? And on TraderJoe, you can earn, let's go to the stablecoin farms. You can earn decent yield here too, right? On your stablecoins. BankerJoe is also available. I think BankerJoe is pretty cool. They already have 2.2 billion TVL. They're gonna have AVAX rewards soon. I don't know when that's gonna be. I don't think they're available yet, but I think TraderJoe is. I think the Joe token is a good one. I don't think they announced that XJoe is going to be able to use as collateral, but given the recent exploits in Cream, right? This is a fork of Cream, and though I trust BankerJoe more than Cream, I don't think they're going to roll out XJoe as collateral anytime soon. Who knows? I might be wrong, but that's kind of how I'm feeling. Also, there's Yodiak. This is an auto compounder. So, for example, if you take your USDC, put it down here, it'll sell your Joe token for you and then auto compound it and put it back into USDC, right? So, at current rates, it's roughly at 39%. These will go down, I believe, over time, unless the Joe token goes up and stuff. But, you can earn decent yield on stablecoins here too, right? But, as you can see, I think in DeFi, you can, expect to earn like at least 20% safely on stablecoins. But, the spell farm I still think is a really good one. So let's go over to the TERRA ecosystem, right? Because TERRA, you can actually earn over 40%, and I'll go over the math on how that's possible. So obviously there's this, right? Anchor earn, you can earn 19.53%. But the thing is, like with Anchor, you can take this, right? You can take your deposit and use it as collateral on Mirror. So I have videos going over how to do this, so I'm not gonna really go over it in too much detail. However, what you can do is when you deposit UST on Anchor, you get AUST back in return, right? AUST is, I guess, your claim on like whatever, however much dollars you have on here. And using your AUST, you can go here and short farm a particular asset. So you can use your AUST as collateral. So you go here, right? I have a bunch of AUST, right? I can use it as collateral and borrow a particular asset against it and short farm, right? So if I wanted to, I'm not going to short Robinhood, but if you wanted to short farm Robinhood, you can earn 42% doing so. And when you short an asset, you borrow something and then sell it, right? So when you, hypothetically, let's say you, actually, let's just go over an actual example, right? So I did that simulation here. Let's say you start with $10,000, you put $10,000 into Anchor earn 19.5%, so your annual interest is roughly here. And if you were to short farm something, so let's go into this website, I'll link it in the description below, but it kind of goes over the historical short APR rates. What I like to do is I like to short gold, right? Just because gold doesn't really do anything, right? It's just like a boomerang. It's relatively stable. So historically, the gold farm will pay you 15%, right? So let's put 15.5% here. And using your, after you short gold, you'll be able to unlock the UST, right? Because when you short gold, you borrow gold and then you sell the gold, right? So with your UST proceeds, you can long farm an asset. Like I mentioned, if this is confusing, I have videos, I have a playlist, I'll link it in the description below. So for example, let's say you're bullish, I don't know, like Microsoft, right? Where's Microsoft? Yeah, right here, Microsoft, right? What you can do is you can short gold, which, you know, is probably gonna be fine, and then long Microsoft. You can also short gold and long gold too, but what I was doing earlier was I was shorting gold and like longing Galaxy Digital, right? I'm bullish this project, or this stock. But what you can do is, you know, instead of, I guess, long farming Microsoft, right? Me personally, I'm not bullish the Mirror token, right? I love the application, right? But I'm not really bullish the token. So you can go to this project called Apollo DAO, right? This is an auto compounder, and for Microsoft, you can take your Mirror position, right, and then put it on here and auto compound your position for you, meaning that Apollo will automatically sell your Mirror tokens and redeposit it back to your pool. So right now it's at roughly 35%. So what you can do is you can put 10K into Anchor earn like 19.5%. You can take roughly $5,000 to farm gold at 15.5%, and then you can farm Microsoft on Apollo, earn 35% right here. And if you do the math, you can earn roughly 45% on your UST, right? Sure, there is risk that, you know, Microsoft goes down. There is risk that like gold goes up a lot, but I mean, gold, look at the price chart of gold, right? It's just like not going to do anything. And keep in mind, AUST is an appreciating asset, right? So, you know, AUST is appreciating 19.5% a year. So even if gold goes up 19.5% in the next 12 months, I'm still not going to get liquidated because my collateral is growing in value. So if you're interested in this strategy, check out the playlist. The description is is below, right? Okay, so now 3 other ecosystems: Polygon, Solana, and then CELO. Okay, so Polygon, the rates on Polygon are kind of much lower nowadays, but you know, roughly, what is this, like 13-14% on stablecoins. Let me connect to the Polygon ecosystem so I can show you a lot more. Okay, so there's one. There's also Balancer. Balancer is a cool one. It's similar to it's similar to Beethoven, right? It's a similar concept. You can earn 22% on dollars here. There are other pools if you're interested in. You know, I'm personally not in the Polygon ecosystem, but I know a lot of people are, 12% on Bitcoin, etc. Also, there's this project called mStable. So I believe their website's kind of buggy when I try to connect to the Polygon ecosystem. I might have to Google it. mStable Polygon. But I believe you can earn roughly 20% on mStable as well. Right here. I think I have to go through here for some reason. Okay, there we go. So what you can do is if you take your stable coins, you can deposit it, earn 14%, and earn 7.45% in additional rewards. So if you stake it, you earn 14% in dollars and 7.43% in MTA tokens. So, you know, I think it's decent. I feel comfortable putting my money on here, but you know, 20% on stables, not too bad. Now over to the Solana ecosystem. So obviously Saber is a good one. I believe they have $1.6 billion in TVL. Think of this as like a fork of Curve, right? It facilitates the swaps of like assets such as SOL, Bitcoin, USDT, USDC, etc. So scrolling down, you know, some of these pools are just like pretty bad in terms of rates, but you know, for things like this, you can earn 20%, 28% on UST. To be honest, it's not that exciting, right? It's one of the reasons I'm not really farming on the Solana ecosystem. But you can also take, for example, if you deposit your dollars in here, you can go to Sunny Aggregator, which is an auto compounder, and they will auto compound your position for you. So these rates used to be triple digits, but obviously it's a farm and dump token, so it got dumped too. It got dumped on, but something to look into. Also, last project I'll go over is Tulip.garden, right? This is, it used to be called Soul Farm. They're also a leverage yield farm protocol, but similarly to TERRA, you can take your stablecoins and lend it out to the degens that are yield farming, right? Leverage yield farming. So, you know, 16, 18% on stablecoins. To be honest, I'm not a huge fan of Solana farms right now. I think Orcas is a good one, but like, you know, other than that, like I don't really see that many good opportunities. I think, you know, Fantom, Avalanche has just better farms in general. Actually, in terms of other farms, one sec, let me connect to the CELO ecosystem. I think the CELO ecosystem is really underrated. Don't get me wrong, when the sushi farm came out on CELO, I bridged funds over, and the bridging experience was horrible, right? Like I was like sweating, right? Because there's one bridge for CELO, right? It's called the Optics bridge, and you know I bridged some ETH over, right? Because I want to take advantage of this ETH USDC farm, right? I mean these rates are pretty good, right? I'm like, okay, like I'm gonna bridge over like 47% on stablecoins, right? This is CELO US dollar, and 50% on USD euro, right? I consider this to be a stablecoin farm too, right? It's a euro, right? Currencies are just stable in general. So bridge funds over to farm this, but the Optics bridge, what the UI does not tell you is that there's like a 4 to 5 hour settlement time after you bridge, right? So when I bridged funds over, I'm like, okay, like cool, like where's my money, right? Because I was on CELO, I was like, yo, like my ETH is not here, and then I had to spend like 15 minutes like digging through old Medium articles that said like, hey, oh, by the way, you know, if you use the CELO bridge, if you use the Optics bridge, you're gonna have to wait like roughly 4 hours. I'm like, why couldn't you just put that in the UI, right? Like, why you made me sweat for like half an hour over here? So the bridging experience is pretty bad. So I think that's one of the reasons why this ecosystem is needs a lot more time to develop. But you know, the farms are good. I mean, I was farming this for like a few days. I bridged back. But anyways, there's that, and there's Ubeswap. These yields are also good. They also have Ube, Mobius, and CELO rewards. You know, you can earn 41% on this. To be honest, I think Sushi is better than this, but maybe you can find like, you know, more obscure farms like, you know, in any of these, right? Like, you know, CELO 23% on that, CELO USD 86%, etc. So hopefully this was a good overview of all the stablecoin farms across all ecosystems. My favorite, of course, is the spell token on Fantom, right? I love that farm. But you know, if you're on Avalanche, maybe there are other farms, right? So there's that. Thank you guys for watching, and have fun farming out there.